Hey folks, welcome to Quantsapp and welcome back to yet another video. In this video, we will learn a very interesting technique of hedging, our futures trade, but that to trading the outperformance. So in this video, we will learn about a statistical technique. Okay, it is more like a statistics rather than forecasting anything. So in this video, we will learn about the pair trading technique. So pair trading technique is a statistical technique which is used to trade the outperformance in two stocks, okay, from the sector. So I'll just give you a background about what exactly we want to do in pair trading, and I will tell you obviously how we achieve it, but I'll just give you a basic idea of it, what exactly pair trading is and what we need to find out. So in pair trading, while we are creating a pair trade, our idea is that we will buy one stock from the same sector and we will sell the other one. That is our pair trade, but I'll just now explain you how you will profit from this technique. So now let's say you will typically observe this thing happening. Have you ever seen that, let's say auto sector goes up. Have you ever seen that only one stock from the entire auto sector is taking that sector positive? No, it won't happen. In an empirical way, in a general way, whenever a sector goes up, majority of the stocks from that sector, if not all the stocks, but majority of the stocks from that sector will go up. But now the question remains, will they go up in an equal quantum? Okay, will the change will be equal? The answer is no. Let's say if the autos sector goes up, there might be a scenario that Tata Motors might go up by 5%, but Eicher Motors might only go up by 2.5%. There is a difference, right? This difference is something what we will treat. Now let's say you bought Tata Motors, which went up by 5%. You have a profit of 5%. Another contra trade you have taken, or another leg what you have added to your strategy, was you sold Eicher Motors as well. Now the Tata Motors is giving you profit of 5%, but the Eicher Motors is giving you a loss. Okay, it is giving you a loss because you have sold it and the stock has moved higher, but it is just giving you a loss of 2.5%. What is the net profit? You got 5% profit, you gave 2.5% back to the market. Your net profit is 2.5%, and this is what we are looking out to trade. Now let's say for an instance, if the market falls, okay, if the auto sector falls, then what would happen? The Eicher Motors will, probably fall more. Okay, Eicher Motors might probably fall more because it is an underperformer. That might be an instance. So let's say if you have created this pair and if the auto sector falls, so Eicher Motors will also fall and even Tata Motors will fall, right? So let's say Eicher Motor falls by 3%. That will give you a profit of 3% because you are short on that stock. Tata Motors will also fall. Let's say it falls by 2.5%, right? Still that half a percentage of difference is your profit. In this case, you win. Okay, you won on the short Eicher Motors, but you lost, small quantum to Tata Motors what you have bought, right? So even if market goes down, the sold security will still give you a profit, and this is what the pair trading technique is all about. But the question is, will it happen? Is it a complete zero loss strategy? The answer is no. Okay, the answer is no. There would be a risk involved, but as compared to a naked long future, the risk is very less because you are hedging it with a statistical difference between the pricing of two stocks, and that is what we are looking out to trade. So now whenever you are going ahead and creating a pair trade, there are few things that you want, but before that there might be a scenario wherein, let's say, you created a, let's say you bought the pair, that means you bought Tata Motors and you sold Eicher Motors. There might be an instance that Eicher Motors might fall 5% and Tata Motors might just fall 2.5%. Still you will earn 2.5% of profit. Even that might happen, right? The underperformer might fall more, but the outperformer, it might fall a bit less. So you can profit even if the forecast is, if even if the sector falls. So the idea over here is that we are not trying to predict which stock is going to move up or move down, but we are trying to identify the statistical difference between two stocks from that sector, right? The idea is not to predict where the market is going to go. No, completely not. Are we trying to predict which will move the most? No, that is not the case over here in pair trading. We are trying to identify a statistical difference what is getting created. So I'll quickly explain what we need. Okay, so first thing we need is that the stocks should move together, so which is known as correlation. So you want both the stocks what you are selecting, and those stocks will obviously have to be from the same sector. Those stocks should be correlated, they should move together. The reason being, you are creating directional trades on both the stocks. So if they are moving opposite, and the moment you created a trade and they move completely opposite from what you predicted, you will be there will be a disaster. So you want the stocks to move parallelly, because we are not trying to forecast which stock is going to move up or down. So we want both the stocks to move in the same direction. So now to find out that, you can use pair trading tool in Quantsapp, and you can navigate to feasibility test. So the tool will automatically populate the correlation of two different scripts from, or all the different scripts from the same sector over here. So it is a matrix. So vertically you will see all the auto stocks placed, and what horizontally as well you will see all the auto stocks placed. So what it is showing us, so Ashok Leyland versus Ashok Leyland. So you can't go ahead and buy and sell Ashok Leyland's futures at the same time, right? So how you read this is, so you create a L. So let's say Asher Motors 61 MNM. That means, let's say if in last 40 days, so right now you are getting to see the look back period used to calculate this correlation is of 40 days. You can change it, but 40 days typically considers 2 months. Okay, so that is the reason it is kept as 40. You can change it whatever you wish to. So now what does this mean? That let's say Asher Motors, if if Asher Motors have went up, okay, in the past, in last 40 days, if Asher Motors has went up 61 times, M&M has went up along with it. Okay, so it is as simple as that. How many times the stock has moved, both the stocks are moving in the same direction. Escorts and Tata Motors is something what you will not create a pair trade, at least now. The reason being, just look at this, these pairs, okay, they are negatively correlated, they are moving in the opposite direction, so you don't want to trade it. You see, anything above 70, that is something what you will target, because those stocks are moving majority of the times in the same direction. More the correlation, yes, better it is. So you can select any sector, let's say metal. Okay, you selected metal, you will see, you are finding out all those greens. So all the green boxes are showing us that these both stocks, so Jindal Steel and SAIL, Tata Steel and Jindal Steel, all these stocks, they are highly correlated. Tata Steel and Hindalco, these are highly correlated. National Aluminium and SAIL, these are highly correlated stocks. Tata Steel and SAIL, again, these are highly correlated. So let's say this Tata Steel and SAIL. So now, the moment you click on feasibility test, you can go ahead and click on any matrix. Okay, you can click anywhere. Let's say if I click on this, automatically a historical chart of that pair, okay, the ratio of that pair would be plotted. So second thing what you need is a ratio. Ratio is nothing but price of A, which is Tata Steel in this scenario, divided by price of B, okay, which is Hindalco in this scenario. So you need a ratio because you want to convert it into a one single instrument. Okay, you want to track one single instrument. That is the reason you need it. And I'll just explain you what your trade is. So the trade is very simple over here. Whenever the ratio is at bottom, 0.20 is something what you bought. So you bought something at 0.20 and you sold something, you exited something at 0.28. Whatever the trade is, just think it in a very simple way. आपने खरीदा 0.2 पर और आपने उसे काट दिया, आपने उसे बेचा 0.28 पर. That the net difference is your profit. Now how would you know that whether the current ratio, okay, whether the current ratio, how much far away it is from mean? So basically we want to find out a mean reversion. What we are trying to find out is a mean reversion. That means if you see this ratio, first thing what you should focus is it trending? Is it trending on the upside or is it trending on the downside? If it is trending either on up or the downside, then you don't touch that pair. What you want is something like Tata Steel and Hindalco, wherein if you see the blue line is showing us ratio on what day, how much the ratio was. It is consolidating typically, right? So now what you want is, whenever it goes at bottom, whenever it deviates to bottom from the mean, you will go ahead and buy the pair. That means you will buy Tata Steel and sell Hindalco. Whenever it deviates towards the top, whenever it goes towards the top, the ratio makes a top. That is the time you will sell Tata Steel and buy Hindalco. At bottom, you will buy the pair. Whenever we say buy the pair, that means buy symbol A, sell symbol B. And whenever it forms a top, you will sell symbol A and sell symbol B. Okay. So whenever we call sell the pair, that means you will by default consider you will sell symbol A and buy symbol B, and that is your pair. That is your trade basically. So you can use simple technique of Z-score. Okay. So Z-score is nothing but it will tell you how deviated or how far away you are from the standard deviation curve. So now if you see 2 point minus 2.5, okay, this is where it is telling you that okay, it is not getting deviated a lot of time beyond 2.5 minus 2.5, right? So this is typically a zone wherever you see that this blue yellow line, it is not getting tested a lot of time on the lower side. That is the time where you will buy this pair. So typically where we will buy is at minus 2.3 standard deviation. That is where we will try to buy this pair. That means we will buy Tata Steel and sell Hindalco. And on the upside, 2.2 standard deviation is something where you will try to go ahead and sell the pair. So now let's go ahead and backtest it. So you can navigate to testlab over here to backtest the pair. So we had Tata Steel and Hindalco. Okay. So let's say Tata Steel and Hindalco. Then you can say, so why we needed Z-score is because we wanted to identify from where exactly, it mean reverts. So where we were placed on a standard deviation curve is something what we need to identify. So we need to buy this pair, let's say at 2.3, and we need to sell this pair at 2.2. Okay. And then you can exit at mean, which means you bought something at minus 2.3. The moment it hits mean, whenever it gets 0, you will go ahead and exit. And then it scan. So now see, this is the strike rate of this pair, which is 80%, which is really, really lucrative in last 250 days. Net PNL you would have made, okay, net PNL you would have made by carrying, by converting your unsystematic risk into a systematic risk was 10.2%. Here, throughout this journey, you never predicted whether Tata Steel or Hindalco is going to go up. You only predicted one thing, that whenever ratio hits the bottom, we will buy. Whenever the ratio hits the top, we will sell. Okay. So see, the profit factor is 17.8, which is very lucrative. You took total 10 trades, out of which 8 trades gave a profit to you, which is very lucrative, and just 2 went against you, which is fine. But if you see, the average loss PNL is very less, average mean win PNL and all those things. You toggle around to the tabular view, you will get to see on what day, what trade you took. So see, this sell means, or whatever the signal is, in fact, the sell means over here that you sold Tata Steel and bought Hindalco. So what this trade is, so let me explain this to you what. This is a sell signal. That means on 3rd of November, you sold Tata Steel at 102.45. Okay. On 4th of November, you exited that position. Okay. Similarly, on 3rd of November, you bought Hindalco. Okay, you bought Hindalco. And on 4th of November, you sold Hindalco back to the market. So just think about it. How much, even this went up, right? Even this went up. There was a sell signal. What happened over here is Tata Steel, it went up, which is okay. But Hindalco went up even more. And the net difference, it was 1.8%. What gave you a profit, right? Similarly, in this zone as well. Buy, that means you bought Tata Steel at 107 on 24th of February and you sold Hindalco at 516. Okay. Now what happened in this zone is even Tata Steel went up, but see Tata Steel, how much it went up? Approximately 7%. But Hindalco, it didn't went up a lot. It went up, but it went up marginally, right? And 3.4% was the net difference what you made the profit of. And this is how you can create a pair trade. You can scan pairs if you want to. Let's say, the standard deviation thing, you can give inputs about to see if there are any open pairs. Now, let's say I want to buy a pair from FMCG sector at 2.2 and sell the pair at 2.2 standard deviation. You can consider standard deviation as, around 2.2 standard deviation or 2, roughly around that. You will get, so all these are the open pairs. So whatever the signal is, it is by default for the symbol A. Sell Bata India and buy Berger Paint. Okay. Similarly, you can create a watch list so that you don't need to actively track anything. Okay. So we got one pair which is Tata Steel and Hindalco. Okay, you bought the pair at minus 2.3 standard deviation, and you need to sell the pair at 2.2 standard deviation, right? You can define your entry conditions that, I want at least correlation to be above 70, only then I will execute the pair. So the pair would be saved successfully. And if there is an open trade happening, okay, if there is an open trade happening over here, you will get to see that, okay, the open signal in the date over here, there will be open mention in the exit date that will tell you the signal is open. So all you need to do is just find yourself few pairs and just add it in the watch list. Whenever you see a open signal, that's the time your pair is getting activated. So this is what is about pair trading. So yes, folks, that was it from my side from this video. I hope you have liked this video, and if you have liked it, do let me know in the comment section. Do hit the subscribe button, do hit the like button. See you all in another video with some new learning. Bye bye, take care, and happy trading.